Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to keep you up to date with the latest agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk here for this Thursday, August 26th. I'm your host, Jesse Allen. Thanks for joining us here today. MarketTalkAg.com, that's our home on the web. MarketTalkAg.com is where you can find us and find all of our streaming sources. We have a lot to cover here today. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here on the show today. Bryan, good afternoon. And, for the most part, a fairly muted grain trade, I would say, today. Wheat was kind of the star of the show, and we saw a pretty tight range in corn and beans under a little pressure. But overall, it just didn't seem like we had a whole lot of action today, but maybe some underlying things you can discuss.
Yeah, Jeff's great observation. You look at now. Let's start with corn again, hovering either side of this 550. It just kind of gets tighter and tighter and tighter, and but part of the story today, yeah, wheat was up, and I'm going to go to the bean market. Pretty good range on the radar. When you look today, you start looking at these totals, and that's going to help a lot of crop. I've had producers say things to me like, I don't know, this might do me some good here. And so when I asked them to put some numbers to quantify this, maybe from minus, thinking they're going to be down a couple bushels an acre to now maybe up or a couple bushels from what they thought. So maybe a 4 bushel swing. So a little bit pressure there in the beans. Good export sales on new crop beans. Good start to the year there overall. Could be faster, but it's still a good start. Good numbers for corn on the new crop too. Well over 700 million bushels on the books for the 21-22 marketing year. But we're starting to see some real consolidation. We got the Pro Farmer Tour behind us, the August report behind us. The next is the September report, boots on the ground. It'll be much more comprehensive. One thing I wanted to just finish this, as long as I'm talking, the corn crop, probably not helped as much by rain. It's been drying down kind of fast in this heat, so it's kind of making a run toward maturity rather than a slow sort of cool down to maturity. Probably drops the yield a little bit in corn.
Well, breaking that down a little bit, on the corn side, I think we've kind of held in this range, this 550 range. We hear the thoughts about the crop and with the dry down and just probably not gaining any more yield. Pretty much what's there is there, especially that northwestern belt. What do you think about just this level, this 550 level? Is this a good spot to maybe do some marketing since we've kind of taken some of the volatility out of this corn market here lately?
Have and there's something that the volatility is actually measured, so the exchange will measure it, and option pricing is based off of volatility, but it's been on the decline really the last, let's say, 2 months. It's just we've been range bound a little over $6 to a little bit around the $5 mark, and it's gotten tighter and tighter. So the volatility is getting smaller, option values are coming down. We're seeing all of that. It's basically just a reflection of the market trying to figure out where a fair price for a bushel of corn is. And as we look at this and say, hey, this is a market that's still a high price. And we've always erred in the past on yields running a little better than farmers expected, because they generally, I think, as a whole, sort of, they're just people. They don't want to count their chickens before they're hatched kind of mentality, so they'll be a little conservative. But with today's sort of comprehensive coverage, it looks to us that this year the corn crop probably doesn't, have as good odds of yielding where the USDA's last estimate is, and that one. So it still looks like it could be a little lower. So we're sticking with our supportive tone in the corn market for now.
Bryan, on the wheat side, I mentioned at the top that was the star of the show today. I know we got some reductions in some numbers that came out. Stats Canada was one of those. IGC, I think we got some reductions there as well. And really, that strength was in Chicago KC wheat today. Minneapolis wheat was a little more muted. But what are your thoughts overall on the wheat market after we saw some of those new numbers and just the tone of the market today?
The tone of the wheat market is very supportive. When you look at the trend of world supply and world carryout, it's working its way downward, and there's problems in the Eastern European countries. Belarus, not a big supplier, but indicated today they'll halt exports for 6 months. All anecdotal evidence of tightening inventory and supply. The wheat market raced higher, put a top in, put a hook reversal early in the week, dropped off. Still looks to me like a correction. Pretty good comeback today. It looks like the money wants to own the wheat market for right now. We longer term look at world supplies generally as being adequate, but they're certainly on the decline this year. I think the market's still trying to figure it out. We'll also watch the planting progress of winter wheat. Very dry conditions in parts of Kansas and elsewhere. I had producers telling us this week, we're not even sure we can get anything in the ground at this point. It's been so hot and dry. So that's, I want to be supportive. Now, if you're a wheat producer, though, you really start to need to look at next year and expect that wheat, a lower input cost compared to corn, with bean prices where they are, there's probably going to be a big push to double crop soybeans or wheat to beans and just grow wheat.
Bryan, I want to make sure we have time for livestock today as well. Cattle and hogs, we were a little bit lower. I know hogs faded late on Thursday's session. We were seeing a little bit of strength there. So maybe start with the hog market. What are your thoughts as to why we saw the late fade in the trade on Thursday?
I think it's just volatility. The hog market's one of those markets that if it doesn't have either continuous bullish news like any bull market, it can fade pretty quick, and it's becoming more of a trader's market. They're selling the rallies, buying the dips. I don't think I want to read too much into that at all at this point. I'm thinking that as we think about what's driving the market, demand, supply. Supply is likely on the rise. Demand has been on a real rise the last 6 to 12 months. You've got inflationary fears, all this kind of stuff driving prices upward. But you've got China that's continually built their herd. So I'll keep coming back to this, that I think the hog market, while well supportive, is a market that needs to be viewed as one that probably has seen its limelight. You go back to June when it peaked, it was up and up and up, and then a violent drop off, then a pretty strong comeback, and now kind of grinding in more of a sideways and lower pattern. I'll continue to argue too that if we can get those deferred summer months back up into the $95 area, that's a good long-term sell and hedge price.
On the cattle side of the trade, Bryan, we're a little lower today, seeing some activity in cash country finally. There's talk out there that feeders are starting to get current again, and maybe that'll give us some leverage with packers, but I know there's also some concerns out there with Labor Day demand starting to be met. What's your thoughts on the cattle market?
Yeah, I think that the bounce early in the week, the sharp gains kind of came a week too late to get the follow through, because it looks like the cash market just didn't budge at all, which told me that the retailers have got the Labor Day supply pretty much accounted for, and they're not making any cleanup purchases at this point. August cattle peaked 4 days ago, hook reversed 3 days ago, which was on Tuesday, down yesterday and down again today at $1.15 on the close, aligning itself with cash prices. Take your pick, 120 to 124. Cutout values, I do like the wide spread between the choice select. Tells me feedlots are fairly current. And that we could continue to see maybe some bid up for cattle, but I don't think we're in a position right now all of a sudden see August or even October, race higher. October's now back under 130. I think it's going to have a tough time holding that right now until the demand market can prove itself.
Also, I know we have that Jackson Hole meeting here going on, and comments expected Friday from Fed Chair Powell, talking about maybe interest rates, seeing if we have some changes there. What are your thoughts on that meeting and any of the news that could come out of that, how it could impact commodities, Bryan?
Yeah, it's interesting because the Federal Reserve, what they've been basically saying is they call this inflation transitory, and it means temporary in the economic world. I'm a disclaimer is this is Bryan Doherty's opinion. I'm doubtful. You don't raise labor costs and then watch them slide backwards. I don't think that's one example. I don't think that's the case. I think the way that this sort of COVID / new administration spending objectives have really sort of run over the idea of what debt really looks like. And ultimately, this leads to inflationary concerns, lower purchasing power in the dollar. We're seeing high prices jump up all over. It'll be really interesting to see what they say if they start to really change their tone. I got a sense of that last month. Right now, I'm concerned that the world's got a real struggle with increasing inflationary values. And, it'd be, for me, I think it'd be refreshing to see the Fed sort of try and nail this. They seem to be way ahead of the game, or maybe they feel they learned their lesson with the Trump administration raising interest rates one after another right away when Trump came into play. And here we're seeing runaway inflation in a lot of areas and tightening supplies, and they're sitting on their hands. It just doesn't seem like they're moving fast enough. I think back to the Johnson administration. I think back to the 70s, and I think about the Vietnam War and all these big, huge expenditures that eventually led to inflationary things. What is different this time around, or am I missing something? I guess that might be my question to the Federal Reserve.
Well, Bryan, I appreciate the time as always. I know we got a tight window here this afternoon, but I know folks can find you and your team online, totalfarmmarketing.com, and give you a call, 800-334-9779 as well if they need some advice. And Bryan, I appreciate the time. I wish you a great rest of your week and weekend.
Yes, sir.
We'll talk to you next week.
I do. Thank you. Thank you, Jesse.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk for this Thursday, August 26th. I'm Jesse Allen reporting.